We're talking about market timing with Fari Hamzy. Hi, Fari. How are you?
I'm good, thank you.
Fari, you've been a trader for a long time. I mean, obviously, this has been a very, very tough market to trade in for a lot of people. You say paying attention to market timing is very important. What do you mean by that?
Well, for example, there's a publication called Timer Digest. It does a competition for people like myself, and they rank you. You make your market calls, and they follow very strict rules. It's on S&P 500 only, and you pick long, short, or flat. I don't know, last 4 years, I've been in the top 3 consistently. At one point, I was number 1. You know, you fight back and forth up there. There are about 150 people there. What you learn is to watch the market internals. You know, the advanced decline. You look at volume up and down. You look at trend. You look at how some of the key names are impacting the market. For example, in the tech area, Apple, Google, RIM. Last year, when the energy was key, you had to pay attention to the Exxon, Chevron, that sort of thing. And then look for new highs and new lows. Those are critical. If we walk through,
what's critical about them? The number of new highs versus new lows, or the stocks hitting new highs and new lows?
It's a key time. No, it is when the index makes a low and how those are behaving. For example, give you a feel about, you know, I went long March 17th, 2008. The day Bear Stearns went down. Next day was FOMC meeting, and Goldman Sachs was putting their earnings before the open. I had been short from this previous summer all the way to March 10th. So I was flat for 7 days, and then I went long. I changed my long to a short in August. Why? Because I look at Fannie Mae. They had over $200 to $300 billion refinancing, all coming due in September. And I just felt that is mission impossible. So on August 22nd, I took all the family and friends out, put a market call out on Timer Digest, said, you got to be going short. The following week, McCain chose Governor Palin as his VP. And that was a no-brainer. I knew immediately Obama's won. And so that was a double whammy. Now, I didn't know how to...
But you weren't looking at advanced declines. You were actually looking at fundamentals, though.
No. I have advanced declines running. I have McClellan Oscillator running. I have some proprietary stuff that we run that are, you know, fairly advanced. Those are running day by day in front of me, you know, on a daily chart. But of course, when you put other events coming in front of you, you have to look a little bit forward to time it. Right. Because when you're trying to sell, you have to sell when the market is going up. And when you want to buy is when the market is very, very low or is going down, because the pressure allows you to do that. You're not going to be able to buy well when the market is going up because you're chasing. You should be getting out at that time.
Right, but very, very quickly, it seems to me, from what you described, you made 2 great calls. Maybe because of your experience, your instincts, everything else factored in. It wasn't just by the numbers, was it?
It was, well, you know, remember, something like McClellan Oscillator creates your tempo. When you have a negative 300 reading on McClellan Oscillator once a year, and you get 2 of them 6 weeks apart, that's a low coming. You know, usually you should be getting 1. You're getting 2, and they're 6 weeks apart. There's a wash. The weak hands are being just shoved out. You know, it's a flush.
So both things come into play.
Experience. Nothing beats experience.
Thank you very much.
My pleasure.
We've been speaking with Fari Hamzy on the MoneyShow.com video network.